Oh, look at this. Look at that. Look at you. Here you are. Here I am. It's time to go live in the Dividend Dive on Sunday. If only if it was at 5, we could just make this all rhyme. It would all sound so much better. Cheers, salud, slancha, prost, whatever it is you say. I'll cheers you my cup of tea. For all of those that you don't, if you don't drink, hey, I don't drink on the program. It's unprofessional. It's not the way we want to run things around here. But I hope you all in the United States had a wonderful Thanksgiving. Thanksgiving. We don't put, oh no, why am I not live here on my channel? We don't have to put things, G's on the end of things, but I think I'm still broadcasting to the world. I know I'm a goofball. I'm a nut. Darth, where are you, man? I sent you the link. Darth wanted to jump on, but while I fumble with this and try to make sure, oh, there I am. No, it's going to look silly, but yeah, for all of you, those of you that like the newsletter today, thank you. I put a little bit of work into that, and it was completely something that I wasn't even thinking of sharing or writing about, but I know that I didn't like preferreds, and honestly, from the community and people we've talked to and talked with, and this is why you love our community, is that they would say, and the prevailing thought is that preferreds, you don't join in the upside of the common stock, right? But then your dividends are stagnant, they're stale, they're fixed, they're frozen, they don't grow, the share price doesn't grow, and then you also don't have in the pecking order of debt, you don't have the same, sorry, I just see Darth getting on now. Buddy, I don't see your hold on, I don't see your camera. I don't know if you have it turned on. Turn it on real quick. But yeah, so all of those of you, I spent the weekend at my in-laws for Thanksgiving. I hope you all did have a really good Thanksgiving. And yeah, Darth, it says not connected, man. I'll let you get that sorted out. But for all of you, again, thank you. Happy Thanksgiving. Hey, it was my anniversary this week too, on the 25th, which was Monday. Good old Monday. I had do some math here, my 19th, I see it, man, 1 second. My 19th wedding anniversary, and then the 26th was the 24th anniversary of the night that my wife and I met. So that was cool. And again, I'm going to respond to all your newsletters or all your responses to the newsletters tomorrow night, because I do have my very first chit chat with a CEO, and it's a CEO you guys are going to be familiar with. I don't want to spoil it. I'll just wait for the video to drop. There's a select few people that do know. So it's kind of fun how this all came together, and you never know when opportunities are going to pop up, and hey, it hasn't happened yet. So hopefully it's going to go off without a hitch. And then with that being said, I'll bring on the man from.
I'm back.
Okay, now I got you. He's back. We got you. What's up, man? How's it going?
Hey, how's everybody doing? Thanks for having me on.
Sorry, I thought you were going to say something more. I had a second.
Oh, no worries.
Yeah, so everybody, Darth Dividend, the one, the only. And we will, yeah, I'm going to keep it all buttoned up secret. It's fun. I got a CEO that I'm talking to tomorrow night, going to do a little recording. And yeah, it was a little bit, I don't know. I don't know if intimidating is the right word. Maybe a little bit of imposter syndrome, but I'm going to do 5 questions with them. I pre-submitted the questions and they gave me the thumbs up. So, hey, you know what? It's going to be fun. You got to try stuff out like that. So, where are you at? Are you at your parents' house or are you at your place?
Yeah, I'm at my parents'. Luckily, because I would be driving an hour to work being a travel nurse dealing with the snow. So I'd have to be up a lot earlier. So it's kind of closer where I work. So that's a good thing. But man, rough weekend for my Buckeyes. Being at the game, and that was just rough.
Yeah, I don't know. I saw you posted something about a fight, but how awful is that? Apparently I know what a room inside your parents' house looks like. I don't know how I should feel about that, but we'll just say I'm overly perceptive and maybe have a penchant to remember odd things like that, I guess. As long as I'm not outside your windows, like, creeping in. But yeah, anyway. So I want to say once again, hello to everybody. If I missed all of you, I know we were pre-chatting a little bit with Janice, Rick, all the usual suspects, Frank, Bernard, what's up, man? Boaz, I love it. We're international, Darth. How cool is that? That we get to talk to people from all over the world, and they get to talk with us, and this community can be a heck of a lot better, you know.
Yeah, we got a lot of dividend warriors now.
So, you buying anything interesting? What's going on with you? Any? I don't. You're. So you. The joke I make around here is out when people say like, "Oh, Darth bought this or that." I'll say, "Dude, just tell me what he doesn't own. It'll be a lot easier to cut to the chase to what you got going on." So, anyway, so what are you looking at? What's something that you've been adding?
Well, I've been going after the dividend growth stocks, and Aflac, ADP is one of them. I've been going after. Morgan Stanley is another one. So those three I've been targeting. A little bit of Starbucks too. So with my M1 Finance dividend portfolio, I've been kind of focusing a little bit on the higher yielder, but I do have the dividend growth stocks in there. So, and we always emphasize this before, dividend growth always wins. And I can kind of correlate that with myself possibly taking a nurse practitioner job. The salary is going to be a little bit less than my travel nursing, but long term wise, it's going to be higher. So, we really emphasize that with dividend growth that it usually wins in the long run. It's been proven to win in the long run. And I've been buying Agree Realty Corporation as well.
Nice, nice. Yeah, it's a little bit expensive for me. Agree. Starbucks, they just feel a little bit expensive. And dude, Hartford Funds, and I've shared it before. Hartford Funds they did a study that shows like dividend initiators and growers just vastly outperform companies that pay a flat and stagnant dividend. Dividend cutters, those that don't pay a dividend. In general, obviously, we can find the anomalies, but I picked this up from the library. I don't know if you guys can see this. So Mark Lichtenfeld, Get Rich with Dividends. This is the third edition. I had read there he is, Mark Lichtenfeld. It's too shiny. It's a library book. I love the library. I save a lot of money. But in 2018, I read the second edition, which he wrote in 2014, and it's updated. He went through it. It almost feels like a new book, so it's really cool. And I might try to get Mark Lichtenfeld on the program. But yeah, he same thing, man. Stresses dividend growth stocks, and it's kind of cool because if the market returns, I think one of the numbers he used was on average. We'll say I know it goes everywhere, but he used 7.9%. So if you have let's round it up to 8. We'll say if it returns 8% and you have a dividend stock that pays 4%, you're right there, dude. You're halfway to matching the market. But yeah, he obviously says what we want to do is buy those great dividend growth, strong companies and just hold them and not try and trade in and out and sell things. But yeah, so you're buying Agree. I don't know, you're holding it for the long term. You don't feel it's a little bit pricey here.
It is pricey right now, but what I may do, and this is what I'm planning on doing, because I need to catch up to you guys with realty income. I'm at 168 shares right now. I need to get to 200. So what I'm going to start doing is my passive income that I've earned from some of my yield max ETFs to possibly turbocharge my dividend portfolio on E-Trade with my monthly dividend stocks. Gaming or I'm sorry, what is it? Glad. I'm going to use the passive income from Glad, passive income from EPR Properties, and the passive income from one of my favorites. I just had a brain freeze, but the gosh, I can't believe I just got a brain freeze. My favorite mortgage-backed REIT that everybody has this conflict in. I can't believe I got this brain freeze.
Pennant, P flat, P sec, pennant. I don't
No,
know.
no.
Yeah.
Let me get back. Let me get back to that in a second.
So you're
It'll
going to
come
use
back.
those to pick up more
Arbor
realty
Realty
income?
Trust. There we go. Arbor
Arbor.
Realty Trust. I have so many companies. It's hard to keep up.
I know, and that's one of the reasons I started paring back is what I found is I wanted to know, I guess, be more intimate with the companies that I do own, and then get a real nice ETF base so I have wide exposure. And as I tell all you guys watching that, I have a 401k through my work where there's a big chunk of our investment net worth in that, and then everything I share on the channel, I've either started or siphoned off. It was March or April of 2020 right as things were picking up that I took 30K and put that in the SDIR, the self-directed IRA. I took it out of the 401k, and it was non-taxable. Obviously, it was easy. Jim, you're going? Jim's already got to go. Too bad. What's happening, man? You got to leave. But anyway, so yeah, that one is my true locked account. I haven't added a penny to the self-directed IRA, but yeah, you guys, if you have any questions in the chat, if you want us to look anything up on Simply Safe, talk about it, throw it in there. But yeah, so you're on M1 too, right? You've got those. I think Ryan, other people, they have the pies. I've never really played around with M1.
Yeah, I'm on M1 Finance and E-Trade. Now it's getting to the point where I do have certain goals. I want to get to 200 with Agree Realty Corporation, 200 shares with Realty Income, 200 shares with Main Street Capital. Now, can I use my returns or my passive income? Because I have a lot of shares in Arbor, and I'm generating like 300 quarterly with them. So why not just throw it into Realty Income and start building it? Because I mean, you've done that before with certain stocks. The passive income you've earned, you distribute it into other stocks. So I'm going to start doing that like what I do on M1 with my E-Trade portfolio. But with M1, yes, I made it to 150K, which is a good milestone. I mean, once
Yeah,
you start getting
congrats.
there, you want to thank you. Once you get there, you're like, okay, let me get to 300,000. So that's another goal. But the risk, with the yield max and QDTE, RDTE, and XDTE, they have been doing very good with buying my dividend growth stock. So, I always emphasize long-term reliability. They're not there. They're not reliable as compared to some of the dividend growth stocks that you discuss on your channel. So, but it's a risk, and I can barely talk, and my voice is just about gone from being at the game and yelling for the Ohio State Michigan game, and we lost. But it's something. You know, dividend growth is amazing. It's just seeing the snowball effect kick in is something that's incredible, and you're not going to get that with yield max. You're not going to get that with the options income ETFs, but the dividend growth stocks that you emphasize, and I have a certain ratio with dividend growth as well. That's going to win the long run, and we've showed it statistically on our channels. I mean, it has proven that it's win. That we win, and for example, McCormick is one of mine that I have. Kroger's a really good dividend grower. Aflac, Procter and Gamble, although the payout ratio is right around 60% right now with Procter and Gamble last time I checked. But United Health Group, I mean, look at the dividend growth in those.
Yeah. So you touch on a good point about the dividend snowball and the compounding, dude, right? That's essentially just when the money you've already made is making money, and then that money makes money. And it's, Albert Einstein. I don't think he actually said it. I think it's been purported to say it's the eighth wonder of the world. But yeah, most of that, it all comes on the back end. If you look at those long charts, those long tail charts, the beginning is so boring and it doesn't look like it's doing anything, but it's at the end where it's literally just like a freight train that's on a runaway hill. And it's really crazy. Same thing with Warren Buffett. Most of his money, his wealth has come after 65. So it's just buying these great companies and just holding on to them. Yeah, Alan, I see you've got Kroger. Hey, what's up, Mark? Stock Mark HQ. I haven't seen you in a minute, buddy. What's going on? And let's see, John, what did you say? You want to know if there's a calculator that shows total return dividends plus total growth. Yeah, there is. I can't think of the name of it. It's a back testing. Uh, if anybody knows, help John out. I don't remember it, but it's a formula to get the total return. Yeah, it's a back. You can back test. I can't think of what it is right now, but you can probably Google it, man, or hit up a few other YouTube. I don't know. Somebody has it somewhere, knows what it is, but I don't know. I mean, but yeah, we can't always look at the past because yeah, while the past is not indicative of future results, it's gonna probably be pretty close. I mean, it should give us a good indication, and right, it's just the quantitative aspect of things. And you, Darth, I don't know if anyone else watching, like, I mean, we can get wrapped up in the numbers. And one thing I love that I've heard is that if you see the numbers on something, everybody sees the numbers on something. So that's where qualitative can kind of have its limitate or quantitative, the numbers, right? That can have its limitations. But when it's qualitative, meaning that it's very subjective and nobody knows what's going to happen, that's where some of the biggest gains can happen. So here we go. Love this one, Rich. What's going on, Mr. Rich? He wants to know what we think about Hershey and is it a buy? So what do you think about Hershey? I'll pull him up on the good old SSD while you're if you want to chit
I
chat
own them.
about it.
I own them. I mean, I think one of their biggest products that people don't realize is Dots pretzels. And people
Yeah.
buy Dots pretzels like crazy, and Dots is really addicting. So if you guys have ever tried Dots, if you have one bite, you're probably gonna like get like 7 or 8 more pretzels. So they've been down though, and that's one thing that's very attractive with them as well.
Yeah, so their dividend yield has just gone way up because the price is well,
Hmm.
we are in the 170s. That's crazy. But yeah, if you want to see their dividend growth, I think you asked about that, Rich. I blew this up too big. You went too big. Yeah, 10% 20-year CAGR, 15%. They raised it in February of 24. So February of next year coming up here, they're going to have another raise. But yeah, they only have a growth streak of 14 years. That's interesting. But they have paid an uninterrupted dividend for almost 95 years. There you see their ex-dividend. They went on November 18th. So that was 2 weeks ago almost. But yeah, Simply Safe using their 5-year average PE ratio, they show that Hershey might be a little bit undervalued. So it could be a good time to pick it up. And again, that's just a backward looking metric that they use. So yeah, these are some numbers. If anybody wants to pause it, I'll just quickly zip through. But you can see their free cash flow payout ratio. It's jumped up a little bit to 65% when it was normally in the mid 40s. But yeah, they're still, I don't know, they're still cooking. I don't know if I'd say firing on all cylinders because they've had issues with cocoa and whatnot. But um, yeah, 204 million shares outstanding. They slowly buy back shares and raise that dividend. So it's gonna be fine. I think I can't see them going anywhere. Really high return on invested capital. So their margins, yeah, some of them are compressing a little bit, but Hershey, I don't see any problem with it. So I think it's just a great bedrock company. And then the last thing before I just keep jabber-jawing here, this interest coverage ratio. If you're new and you don't know what the ICR is, this shows us how many dollars of operating income there is to cover every $1 of interest on the debt. So currently Hershey has $14.52 of operating income to easily cover every dollar of interest on the debt. And before I do that, we'll share one more thing. FinChat. Let's see. I'll get you a price target on them. I love FinChat. I don't know if you guys want a really good and free. Like this is the freemium version of FinChat. That should be loading up here. I don't know if this is awesome. You know, when you go live and and you get the spinning. And I think I hit something here. Come on. So I want to show you.
Cool.
Yeah. Well, if it was working, it would be. What did I do here? This is the beauty of this is what I meant to do, everyone. There we go. That's what I meant to click on. But I'll zoom. There we go. Now I zoom it in. So price target of $183, the analyst. So it's actually that's been lowering, but one very cool thing here is return on capital employed all the way in the lower left of your screen here. I can't get it to just be on that. 29.5% return on capital employed. 20% is outstanding. So this is a 5-year average, and I don't know if that's going to come down a little bit, but there you go. So I think long term, this is going to be. What did I do here? Why are we not back on? Oh, that's why. Hold on, everybody. There we go. Yeah, so I think Hershey's a good bedrock company. What do you guys in the chat think? What do you think about Hershey's? Let us know.
And they acquire good companies too. So their acquisitions are pretty impressive. A lot of their products are bought in stores like crazy too. So I mean, they're still making money even with the Ozempic craze and stuff.
Yeah, I think they'll be all right. So yeah, they got a couple headwinds, right? Ozempic, the GLP-1 drugs, but so many people are on those. We don't know the long-term effects, and I think that's something that's going to be kind of I don't know if I want to say a fad, but dude, back in the day, there's always something that comes out, some kind of health craze or thing that people are going to lose weight. But dude, at the end of the day, you just can't bet against the American eater. Like people in America love to eat, and I can't see that changing anytime soon. Here, Alan wants to know what's your largest position. If you want to share that, do you know off the top of your head?
Right now, Arbor Realty Trust. I'm at like 400 plus shares.
And then that goes right into, well, we'll save John's question here, but James want to know about thoughts on PepsiCo. My thoughts have changed a bit, so I don't know if you've been following along. We needed a second car, and I apparently have been living in the past because I assumed that a really good SUV, maybe with 50, 60,000 miles on it, something maybe 5, 6 years old, I thought that would be around, 10 to 15K. I was way off. It's more like 30K, and that's just the market. So we bought a 2021 Volkswagen Atlas, family car for a few more years. We'll sell it, but it costs 31K. I'm going to be selling in this. Oh, it's December now, right? So this month, in a couple weeks, I'm going to sell my J&J shares, 115 of them, and PepsiCo to pay for it. More kind of like a loan to ourselves. And I understand people are going to say, oh, but the compounding and all that. But we're going to create a payment plan for ourselves, a spreadsheet bi-weekly, a little more when we got it. So we're just going to pay off the loan. That's going to be our New Year's gift to ourselves, pay off the car loan. We'll have that thing. And then I'm going to have fun buying back. But I think I'm going to be buying things that have a higher total return because James, I don't know how old you are and what your financial situation is, but for PepsiCo, my opinion on it is that it is great. It's like a Hershey, but they're so big, they're so blue chip, they're so mature that the total return potential, and it's funny as I'm reading Get Rich with Dividends, he makes the case that those are exactly the businesses you want. You just buy them and forget them. But I think I want something with a little bit more total return potential than PepsiCo has. So yeah, nothing wrong with them, but they're just really big and stable, and that payout ratio has been getting a little bit high for them. So I think that they are good. I'll end it with this epic ramble. I think they're good for somebody that's in the wealth preservation phase, meaning somebody that's trying to live off of their passive income. But someone like me, and just my opinion, in the wealth accumulation phase, I think I'd like something a little bit more, a little bit better total return potential. So that's just my thoughts on those. Saying kind of the same thing with J&J, but we'll roll that into, but nothing wrong with it, James. And hey, if I don't think it's going to go anywhere, I think you'll be just fine. So John wants to know, are you not concerned with Arbor as an M REIT? Has a nice, I don't know what you mean percent, John, but you're not concerned about the price loss over time, I guess. So I think he's probably talking about the Arbor price loss. And if you want to share some thoughts, I will pull it up.
They have good revenue trends. Again, reliability may not be there in the long term. It's good again, I'm an income investor, so I'm like a hybrid. So I'm income value and dividend growth investor. Arbor, I mean, they're really hot right now. They've done well against the S&P. They've had a lot of controversy, and they've done well as a mortgage-backed REIT. Probably they might be the best mortgage-backed REIT out there. But I mean, I just earned $300 with them in dividends quarterly. But am I going to rely on it for long term? Probably not. So it's a good income REIT, but there's a huge risk with that. I mean, the dividend yields up. The revenue trends could be iffy, so you got to be real careful with that.
Yeah, so I think what John might be, well, actually, I'm surprised. This looks a little bit stronger. Yeah, I've tried to learn M REITs and I just was out of my circle of competence, so I gave up. But yeah, as far as that, obviously out of the GFC, they cut the dividend, it looked like, to nothing, and they've been growing it for 11 years. So they've been growing it coming out of the great financial collapse or crisis. I always get that confused if it's great financial crisis or collapse, or if that's just interchangeable. That's C. But yeah, M REITs, so they pay quarterly. It looks like it's been frozen since what, August of 23. It hasn't been raised.
Mhm.
So Yeah, they think it looks speculative, but they give it an expected price of $13 to $16, so it's probably right fairly valued. But um, yeah, with the earnings payout ratio currently at 92, almost 103%, but they've been as high as 148 in 2014. So I struggle to understand MREITs, and it's just the sandbox that I won't play in. It looks like they reduced some shares. That's interesting. And yeah, I don't know. It's just I don't know enough about MREITs to, I guess, speak intelligently on them. So
Huge
that's
risk. I mean, that's why I'm using its income to buy realty income and stuff. I mean, long term, I would probably pick realty income over Arbor or Agree Realty Corporation or Prologis over Arbor Realty. But recession happens, it's going to hurt. So you got to be careful with that.
isn't that trying to time the market a little bit? I mean, do you ever think about that? Like maybe would you just forget like some of the I don't know if this is your I know you've said your play money, things like that. I don't know if you would just ever consider going out of them and just sticking to all the things you do want to be in long term, or do you enjoy that? You enjoy the I guess a little bit speculative nature, right? A little bit of the gambler type mentality.
Uh, you know, I like high yield, but you got to be careful with high yield. I mean, it's so far it's good. But if some things start going bad, yeah, I'll get rid of it because I got rid of Horizon Technology Finance, HRZN. They've been down. And I said, hey, take a little tax loss harvest because I've made a lot of money with my Yield Max ETFs. And I'll throw that maybe into O or throw it into MSTY and use the income with MSTY to buy Hershey's or some of those really good dividend growth stocks. 'Cause I mean, I'm just going to emphasize dividend growth wins in the long term. So it's going to be nice and I'm earning this amount of income here, but long term wise, it's going to be even with the dividend growers, and then the dividend growers are going to start to win. So I always give an analogy with the tortoise and the hare. It looks great right now, because of the yield stocks and the income stocks, but long term wise, the dividend growth is going to win.
Oh, dude, or the tortoise and the hare made me think of that meme with the little the snail that has the rockets come out of them. That's kind of a dividend snowball. I mean, it's real slow and boring
Yeah.
in the beginning, and then it just shoots off. I want to get to your question, Trevon. I'm not familiar with Texas Pacific Land. I've seen it pop up on a few things. I don't know if you're familiar with this,
Uh,
Darth, but
yes and no. I mean, it can't really like give good answers with them, but
yeah, so they get a dividend safety score of 60, which, hold on. Oh, there we go. I finally did it right. Borderline safe, dividend yield of 0.40%. It's kind of funny. So some of you might see this $1,600 per share price. I've never looked at this. I'm going to guess that they probably have maybe like 10 to 15, 20 million shares outstanding, something like that, to get that share price that high. But hey, they were founded in 1888 and they do transportation, selling materials. So I don't think they go out looking for it. It looks like they just manage the land and the resources, which, okay, that's, yeah, it is something I know nothing about. So this is just going to look at a few numbers here for you, Trevon. Take from it what you will, but they've been growing that dividend lightning quick since 2017. A lot. But
yeah, they've
yeah,
been
let's see how
boring.
many shares. Special. They had a special payout of $10 a share. Yeah, it looks way overvalued according to that's just according to Simply Safe. But yeah, I want to see their shares outstanding. But yeah, free cash flow payout ratio. So yeah, all their payout ratios are super low, so they can easily pay that dividend. Even though free cash flow per share has been dropping a little bit. Yeah, there it is, 23 million shares outstanding. So they don't really split shares, and that's why they're $1,600 a share. But yeah, really high return on really good metrics, Trevon, really good margins, and they should be fine. Just looking at the numbers again, I would need to look at the 10K. Yeah, there you go. Remember we talked about ICR. If you're just joining in, how much operating income to cover every $1 of interest on the debt? TPL, Texas Pacific Land, has almost $600, so
Wow.
they can easily cover the interest on their debt. And then, you know what? Here, I'll pull. Let's see what the analysts say. And if you were around last week, we talked about where they get these numbers for the price target, but they give a price target of 917. So yeah, it's probably a little bit overvalued, Trevon. But hey, pretty cool. I like what you're thinking, and a lot of you shouldn't be scared off by a high price on a stock, because I know a lot of people think if it's $5 it's cheap, if it's 1,000 it's expensive. But honestly, price tells you nothing about the business, because there are some, if a company has no revenue, if it's been dropping its free cash flow, it's negative, its revenue's been falling through the floor, and it's $5 a stock, it's probably way overvalued. So that's anyway, a few thoughts on that. I like
Yeah,
it,
I mean,
Mond. I see Mondelez going through. Yeah, what's up, man?
oh, I got them too. Love them.
I think they own Sour Patch Kids.
Yep.
And your MPW price is down plus a dividend cut. Well, from when? I mean, a lot of us talked about it. That's right, man. I know you were buying them. I never got in. I didn't really know much about MPW, and I spent a couple nights going through their annual report, and I don't know. I didn't like what I saw. What turned it on to me was one of the short reports, and it seemed like some of what they said kind of checked out. But I don't know. Some people in the chat a month or two ago said that they were turning things around, and I don't know if they got a new CEO. I've not followed them at all. So, what do you? Are you still in MPW? What are your thoughts about them?
For play money, I just might put it in. Again, things are going to transition, and I'm not going to be doing as much play money, and I'm going to be a little bit more decisive, let's just say, with my dividend growers. So, it's fun. The travel nursing is going to end soon. I can tell you my body's feeling it at 39. I have actually a heat pad right here on my back. Like I'm just dealing with
Look at
that.
this guy.
So,
Yeah. God
it's
bless
starting
you,
to add
man.
up, but I'm kind of excited. I do have a position coming up, possibly, and I'll find out Monday if I'm a finalist with a nurse practitioner cardiology electrophysiology fellowship program. So very excited, and it's actually my former hospital I'm at. But yes, I will take a little bit of a pay cut, and that play money. Looking at MPW, it doesn't look very attractive once you take a little bit of a pay cut to do a residency and stuff. Um, I don't know. It's just I'm in CTRE. I kind of prefer that one a little bit better over MPW right now as
Yeah.
a healthcare REIT.
Well, we're gonna need healthcare, but again, it's the business. It always comes down to the business, and every business is not equal from what I've found. Um,
Well, I mean, they're
it's-
doing
it's-
good. I mean, they're doing good. And then the pandemic hit. Nobody wanted to be in the hospital or anything. So that kind of hurt them revenue wise. So they're already in a bubble. And then that just bubble is a perfect storm and got them.
Shannon wants to know, what are your thoughts on Oak Tree? I don't know if you have any thoughts on Oak Tree.
Yep.
I pulled them up
I,
right quick.
yeah, I have OCSL. I have probably less than 100 shares. I'm just holding.
Isn't that Howard Marks's company? I should know that. Because I listen to his podcast. I think yeah, specialty lending. So they get a dividend safety score of 40 unsafe. I'm pretty sure it's Howard Marks's. I mean, I love Howard Marks, but
I mean,
yeah,
they're
look at
really
that.
good. Doesn't
Yeah,
look
that
good to you.
dividend history is not so much.
Yeah,
But
that's the one thing you have to be aware with
yeah,
business development companies. If they're not getting the revenue, there's going to be a dividend cut. I mean, I'm in Capital Southwest Corporation, CSWC. You can check them out on there. I'm in Hercules Capital. I'm in Agree. Um, sorry, not Agree, but what's the other one that I just got into? Blackstone Secured Lending Fund, BXSL. I'm in, Aries Capital. I'm just
yeah,
thinking
I'm
of
still
some
in
other
Aries.
ones. FSK, I'm in those ones, but you have to be really careful with those high yielders, and that's more for income investors. And I
Yeah,
myself, I'm as I emphasize, being part of the hybrid. I do have that in there, so I would love to get to 400 shares and use that income to buy dividend growth stocks. Main Street Capital, I have. Um,
got it. I want to touch on this real quick as far as Oak
yeah,
Tree here. Their earnings payout ratio, remember they're a BDC, so we don't look at free cash flow payout ratio. That's my preferred metric for other than REITs and BDCs and utilities and MLPs. But yeah, their earnings payout ratio is flirting right around 100%. So definitely got to be careful there. That doesn't look good. I don't know why. Again, I'm not familiar with Oak Tree. I do. If somebody throw it in the chat, it's got to be Howard Marks's, because unless I'm thinking of some, I love Howard Marks, fantastic investor, but yeah, they're dilute. I mean, that's what BDCs do. Sales looks like they've cooled off a bit. So Shannon, I don't know enough about it, but if you want Simply Safe's opinion, they say the dividend is 40 unsafe. And yeah, just looking at that earnings payout ratio, flirting with 100%, man, I would be a little bit concerned. And tread lightly, my friend. Hershey, 140 buy-in. Oh, Killer, what's up, man? One of my, I don't know what to call you. I got you, Whiskey Tango. You guys are a little bit of my pushback crew. I love that. But probably a dream in this age of fraud. A man can wish for a market crash. Yeah, there's like 3 of you, not including, I know we had Jorge a while ago. This a random guy just being a total troll. Nothing, only just causing problems. But I'm very open, as I tell you guys, to I love constructive criticism. That's how I learned Whiskey Tango Foxtrot WTF about how I was holding my MLPs, which was EPD inside of tax advantaged accounts, really suboptimal. So I learned something, and I love that. But basically, he said it without being a dick. There's a way to do it, to say, hey, you might want to think about this, some pushback. So constructive criticism, constructive pushback, we do invite here. But Hershey at 140, man, I don't know what that yield would be. But the thing to remember is that when dividend stocks keep selling off, when the share price falls, the yield goes up. So if that yield keeps climbing, I mean, you're not going to see it's like a 6% yield on Hershey or something. I don't know what it would have to get to be over 5%, but people will just start coming in and buying because they're going to say that's crazy. Like, if you think Hershey is not going to go out of business, that's a great thing to buy. So, and then when people come in and start buying, well, then starts pushing the share price up, and then the yield will start falling. So, I'd say good luck, man. That's wishful thinking on that, but let's see. I want to get caught up here. Getting close. Oh, Rich, here you go. You got thoughts on Pfizer or Bristol Myers? Which one do you think? I know you probably own them both, right?
Me? I know
Yeah,
that's
yeah.
first. I don't own BMY, but I do own Pfizer.
Yeah, I think for me, I think their revenue was falling. I haven't looked at them in a long time, but their revenue, I think I saw, was falling, and that is just not good, because it looks like they had a big bump from COVID, from the pandemic. But
hmm
I don't know their pipeline. Again, that's just some really quick thoughts. Thoughts on LAMR. Is that Lamar? I think that's the billboard company, right? Here, I'll show you one, because I don't think we've talked before. It's so funny. I remember so many of these names, but let's see. Let's see one. I'll put up Lamar for you. I'm pretty sure it is pretty sure it's been on my radar before. Yeah, Lamar. Yeah, so it's a REIT, borderline safety score of 60. Looks like it's overvalued according to Simply Safe. And yeah, there you go. Operates outdoor advertising company in the United States and Canada, and they do the billboards, buses, shelters, benches, logo plates, and airport terminals. And they were founded
Nice.
in 1902. So hey, I just from somebody that's never dug deep into this business, I know I still see billboards everywhere. And I do notice, next time some of you are driving around, look at the bottom of the billboard. It'll usually show who owns it. So you can start counting Lamar billboards, see which ones they own. But yeah, they cut for the COVID crash, and then they've raised it up past where it was. So I think it was a good company from what I saw. Looks a little overvalued, but without getting too stuck on the. And there we go. Pop up, please. So their AFFO payout ratio very low. They have no problem paying that dividend, and yeah, everything looks like it's good. Yeah, sales took a little bit of a hit. AFFO growth is slowed, but yeah, they don't dilute too much, which I like to see. So yeah, it's a good company. Just from the numbers, again, we always want to look at the 10K and get as much information as we can on the businesses. But from everything I see, what one bugaboo, their debt might be a little bit high. But yeah, looks solid to me. So,
What's
there
the
you go.
price per share?
Lamar is currently at $134.02 per share. Is Lamar.
I think that's more
Yes.
than Prologis.
Yeah. So, but Prologis, I don't know their shares outstanding. And yeah, here, I'll just do it really quick. Yeah, Prologis is one that I'm very familiar with. Work in their buildings. So they have, so Prologis is, I don't know what you got here, $116, but they have 952 million shares outstanding. So they're, sorry, everybody. So Prologis has a market cap of 108 billion and Lamar is 13.7 billion. So yeah, Prologis just dwarfs them on their market cap. But anyway, so Alan says doesn't like spending over $100 a share, but eventually decided to buy a share of Apple. You know what, man? I would challenge you on that. I would say, again, it's not about the per share price. That tells you nothing about the business. But if it's a good business, if it's Lockheed Martin, if it's Berkshire, fractional shares nowadays, we can easily buy fractional shares to get in these businesses. And there's no shame in owning a quarter of a share or something because you're still going to participate in the same amount of gains. So I would rather have a quarter of a share of a really good company than, 10 shares of a company that's, I don't know, $10 and isn't doing so well. But oh, Jake, what's up, man? My year-to-date return so far. I could pull that up.
Let me get my phone. I can tell you with my M1.
So it's
Right
it's a
now.
little bit convoluted because, like I said, I don't have my 401k in there. We have a significant amount of money for our kids' college, but if I were to here, I'll let you tell yours. I'll pull up
Yeah, I'm
my
looking mine up
Schwab.
just for M1.
But I got to be careful with this because I'm not gonna, I don't want any account numbers being shared. So you guys, I
Yeah,
love it. Sometimes I make these videos and I put the blur box over account numbers, but here, I'm getting there. Portfolio performance year to date. To answer your question, I am. Oh, where is it? I know this is riveting for people that are just jumping on looking at a couple of dudes. So it looks like it might be, well, it shows me 33.89%, but that's over the 1 year. Yeah, I think I can share this because I don't, here, I'll share this screen because I'm not, yeah, there's no account numbers here. So let me share this to everybody and for you, Jake. And if there if there is, we're just gonna go dark. I'm gonna hit the kill button. But yeah, so I got year to date for the 4 accounts that I share, and yeah, it's not showing me the percentage. The rate of return, it says it can't chart this data. Try again later. If I do 2023, yeah, I don't know why it won't do that, but here, this right here, this is what I was looking at, Jake. I don't know if it's big enough for you, but it shows the 1 year down here is 33.89. Yeah, I haven't really played around with all this individuals. No, we don't want to show those. It was only the last 3 digits, but anywho, so apparently it might be 33%. So what do you got? What do you got?
So for my M1 dividend portfolio, I'm up 25.97. And then for my IRA with my M1, I'm up 55.57%.
So it's been a raging bull market and we all look like geniuses. So remember, I don't know who the famous quote was, but not to confuse brains with a raging bull market, something like that. There he is. I knew Whiskey Tango was going to show up. Yeah, MPW is just gambling right now. I love
agree.
that. Yeah, well, yeah, I wouldn't disagree, but All right, let's see. Harsha, who also works in the medical community, in the medical field, I believe up in Wisconsin. I think. Could be wrong on that. Correct me if I'm wrong, Harsha, but she thinks, or he thinks BMY is way better than Pfizer. Bristol has exceptionally good pipeline, plus they had one novel schizophrenia drug approved just a few weeks ago. Pfizer's pipeline is not that enticing. And for me, I'm going to take another page out of Buffett when he would say that it's really hard for most of us to evaluate a drug company's pipeline and what drugs are going to go on to be those superstar blockbuster drugs. So the best thing to do is to just buy a basket of companies when they're trading at really reasonable valuations. So, and that's obviously going to be subjective for all of you when you think they're when they're going to be I don't know, reasonable. Maine is reliable, but don't bet the farm. Yeah, for me, I've been holding them. I have a cost basis. I shared this in the portfolio update video. I've subtracted all of the dividends and option income received. So I have a 10% or yeah, 10% yield on cost with Maine right now. My average price per share on the 150 is 29 bucks. So that's kind of cool, man. Every month, that average cost per share just keeps dropping, and eventually it'll get to zero. So I'm looking forward to that. But yeah, Maine is one I don't think I would feel comfortable buying up here, but it's won't stop going up. Yeah, Harsh also wants to know: do we like any commodity ETFs without K1 metals, oil? Honestly, I haven't looked at any commodity ETFs. Harsha, how about you, Darth?
No, I mean, in my traditional IRA, honestly, my ETF, which I'm going to be rolling over from my travel nursing company, um, with that 401k into my traditional IRA that I'm rolling over, it's going to be all SPLG and the SP 500. I mean, my philosophy with an IRA, you want to either be in line with the S&P 500 or beat it. So I'm not going to be buying high yielders in my IRA. That's just crazy. I want to increase the net asset value, growth, and stuff. I mean, S&P 500. I'm in VGT. I kind of just focus on those ones.
Nice, nice. B Hall wants to know thoughts on DG. I don't know if this is Brees Hall. If it is Brees Hall, thank you for swinging on by the show. But thoughts on Dollar General? No bueno. I think they're going to be hit. If I think a lot of this has to do. Well, no, the problems really started before Trump won re-election, but I think it's compounding it. Where if there's a big tariff on China, that's really going to hurt their margins even more, I think, because they're going to have to pay more to import their products from China if that all goes through. So honestly, but it's going to reach a point where it's just low enough. And then you have to say, okay, are they going to go out of business or not? But, crazier things have happened. So, I guess remind me, Brees B, maybe we can look, we'll look at it. I want to get caught up in the comments here. So there he is. He said, "What the you doing? Love it." He also says, "Whiskey Pfizer has many misdeeds. May well become public under DJT." Well, we'll see. Yeah. Also, that's been a headwind for the medical industry with RFK being was it HHS, Health and Human Services Secretary. I almost said like commander or something. Yeah, but I think that I don't know. He doesn't run everything by himself, but he can certainly impose his will and put his fingerprint on things. So I think a lot of the pharmaceuticals are kind of reeling because of him and what he might do. I know he's talked about being healthier and holistic and not being, being so. Anyway.
I think he's going to be at least common sense with vaccines. Like, people need vaccines. I mean, I voted for Trump. I mean, I'm not going to lie, but you know, there's a purpose for vaccines. Measles, polio, and stuff. I think he's more of a realist with stuff. Some of the data they had in the beginning, and I don't agree with this. I mean, I'm pro-vaccine. I did get the COVID vaccine and stuff, and if my health insurance would have covered it, I would have got it again. But you know, them lying that if you get a shot, you're immune immediately. That's going to backfire on some of those companies, that Pfizer and Moderna. So it's going to be interesting.
Gotcha. It will be interesting. And, for somebody like me that's pretty much center as center can be, whoever is in charge, whoever our leadership is, it's just, I want them to do good because it's better for all of us if they do good and the country does good or well. whatever. Price what either you buy Costco at. Well, initially I said 500, right? Or 500. I've upped it to about 600, and it'll get there someday. There will be an opportunity. Hopefully, I'll have money, but someday it will get there. Steve says PPC Ian likes Pfizer, so he's in. Hey, if you want to borrow Ian's conviction, go ahead. Julian, dude, thank you so much for your service. We really do appreciate that. Thank you. All right, let's see. I'm getting caught up here. Dude, the time just flies by. I can't believe it's been 50 minutes.
I know.
Ridiculous. All right,
Usually flies when we're doing these, when we
and I
just
haven't even
realize.
done the news yet. My God, Steve. Why didn't you remind me, Steve? Come on, man. He's been holding Maine. There was some talk about Novo and insulin business. Yeah, that's not my jam. There's some color from Whiskey Tango. Commodities ETF is actually a country's ETF, Brazil. Huh. EWZ is approaching some 52-week lows. Yeah, that's another sandbox I haven't looked in and played around at. But all right, if you guys want to see the news, I'll do the news really quickly. The Simply Safe news will have to, let's see, we'll get to it here. We'll leave us off. Here, we'll go that. I'll just do that. What was it? I think 25th. We're starting here. There it is. So Universal Health REIT, look what we start with. We'll just go very fast, all of you in the chat here. If you want to look at their blurb, whatever they wrote about it, pause the video. But UHT raised their dividend 0.7%. Diversified real estate activity, RMR, gets a dividend downgrade. It sounds like a close. Oh no, RMR. I've looked up them before. That's awful English. Hormel raised their dividend 2.7%. Shout out,
Yep.
they got spam. Kohl's, they got a dividend downgrade, dividend safety downgrade to 10, very unsafe.
Ooh.
Yeah, Dollar General got a, there you go, dividend downgrade from 50 to 40. They call it unsafe. And yeah, right there, President-elect Trump threatened this week, placed 25% tariff on goods from Mexico and Canada. And yeah, that could hurt their bottom line. Refresh an outlook on Oneok. They upgraded Coca-Cola FEMSAs. I think this is their bottler, but it's the bottler in, I think it's Latin America. I don't know. But I think
I think you're right.
Yeah, so look into I should look into that. But anyway, their ticker's KOF. They got a dividend upgrade. ABM, they got a dividend upgrade from 61 to 80. Got a few more here. They refreshed an outlook on Bristol Myers. And then lastly, an aggressive payout increases. This is a covered call fund, I think. BlackRock. I don't know what this is. CII. So it got a downgrade. But there you go. That's the super fast version of the news. And yeah, I love it. Some of these. There's a few people here that are in the medical community. Like Harsha definitely is. Harsha, what do you do? Throw it in there before we get out here. I want to know, see if Darth is familiar with that. All right, let's see.
A little bit. But yeah, Eliquis is a really good blood thinner because with Coumadin, if you take Coumadin, there's an antidote, vitamin K. So if you eat green leafy vegetables, it'll throw off your blood thinner levels. Eliquis or Alto, you take that, you don't have to worry about getting your finger pricked to check your Coumadin levels to make sure you're therapeutic. So that's nice.
Sorry, I thought you said cumin levels. I was like, oh, we use that when we're making food. My cumin levels are just fine. Yeah, right. So I'm a welder. I don't know, dude. You're gonna say some stuff that's gonna go just right over my head.
So
try.
Coumadin's a cheap blood thinner. Warfarin, it's the rat poison. So that's basically rat poison.
I'll
It's a
stay
blood
away
thinner.
from it.
Yeah, that's the stuff they give rats. But Coumadin, you take it, it thins your blood. People that are in AFib, history of blood clots and stuff, AFib exponentially increases your chances of getting a stroke or pulmonary embolism or anything like that. So Coumadin, you have to take it. You have to be within this therapeutic level of 2 to 3. And if you take an antibiotic, it can shoot up your Coumadin levels, which can increase your risk of bleeding, brain bleeds and stuff, nasty stuff. Eliquis, you can, eat green leafy vegetables. You don't have to worry about vitamin K. I don't want to get too in depth or anything because, you're be like, what are you talking about?
Yeah.
So it's basically it's a little bit safer than
And
Kuminic.
we're coming up on time too, and I want to make sure we get to the important stuff. Like I saved this. I was walking over to turn the camera on, and like I said, so we spent this weekend at my mother and father-in-law's house. We talked about doing a trip, like a Airbnb. So it'd be my wife, my two daughters, her brother, his wife, and their two daughters, and then my mother and father-in-law. That'd be 10 of us, two dogs. We're gonna get an Airbnb somewhere. Outrageous prices. So my father-in-law came up with the idea and said, why don't we just have everybody come to my house for a couple days? We'll just turn my house into an Airbnb. And I was like, I like the sound of that because that saved us a whole hell of a lot of money.
Yeah.
But we played this game. For any of you that are going to be playing games here, this game is called Hitster. It's a music party game. It is really cool. There's, I don't know, a couple hundred cards. They all have a QR code on the back, and it's plugged into Spotify. So nobody can see what it is, but you split into teams, and on the other side is going to be the year the song came out, the artist, and the title. But you scan the QR code and you hook up to a Bluetooth, and it'll just start playing the song. And your team has to guess what year it was and where it goes in your line of cards. So it's a lot of fun for all ages. So if anybody's looking for a Christmas coming up, a fun game to play or give away, I highly recommend Hitster. And I wish I had an affiliate link now. I'm like, hey, think of these things, when you start promoting stuff. But uh, as far as Harsha, your question, tariff on the BRICS, which is Brazil, Russia, India, China, and what's the S? South Africa? No, what's the S? I should know that. I don't know. I guess I don't really have a very good opinion on it, but
I don't.
I generally don't support tariffs. They're and I understand we're trying to the idea is to level the playing field, but for me it's the your citizenry always pays the tariff. It's a tax. It's arbitrary. So I don't know. That's probably too much to get into that, but um yeah, you all are gonna have here. Alan, I like this, man. You're thinking of doing what we suggested, buying fractional shares and start getting Costco. That's probably the best way. It's a really strong company. And here, let me do this. We'll give you, let's see what their price target is for both Simply Safe and FinChat. So we won't go through it. It's a solid company. It's a beautiful. So their expected price range is between 589 and 719. So it's quite overvalued. And then if we look on FinChat, if I share this tab, see what the analysts think of good old cost. They have a price target of 939. So there you go, all over the place. It just goes to show you that analysts are kind of really good at telling you what just happened, but not so much at predicting the future and what's going to happen. That's something I've learned. But yeah, dude, we all want to believe that these analysts and experts, nobody knows the future. And I love to say it, man. That's what makes life so interesting. That there are billions and billions and billions of no trillions of possibilities every second of the day available to billions and billions of people. So because of that, nobody knows what's going to happen, which makes life so interesting and yeah, sometimes frustrating. But all right, I'll end it with your last comment there, and then we'll wrap it up. We'll hear what Darth. What are you watching? What are you doing? Even super great companies can be mucho overvalued. And my only pushback on that, Whiskey, is yes, now, but if we look back, 20 years from now, will we say, man, we should have been buying Costco right there if we zoom out? So it's all indicative of the company. And James, I'll end with yours. Cryptos, no, not for me, man. Good luck if you got in, but it's just not for me. It's gambling, and I know you'll push back. No, it's not. So what are
Oh,
you
it's
doing, man?
pumped
You
and
watching?
dumped.
Yeah, I we'll see. We'll see. I don't like it. And Harsha, I do still own 200 units or coins of XRP. That's it. I'm not buying any more. It's just there. It can go away or go to a million, whatever. So, dude, you watching anything interesting on TV or doing anything fun?
Me, well, I just had to experience an Ohio State loss that was a rough
Yeah.
one. But honestly, I'm just kind of excited for the next move. I have a lot of job interviews coming up, so might be a little limited with my videos, but I'm pretty excited.
They do, but that's life. That's life. And I always say we got to focus on life. And, that's going to set you up for the next great thing. And that's where you want to go. Right. So, yeah, I love it, man. As far as myself, upon conclusion of this, my brother in law highly recommended a movie. I don't know if anyone has seen it. It's called, I think, Feast of the Seven Fishes. It's a Christmas movie. I think it takes place in like 1984. But we're gonna sit down and watch that. I think it's a family. I don't know yet, but
Nice.
I know we're gonna watch it. So, um, yeah. Well, I don't know, man. I do appreciate you stopping by, and hey, everybody, make sure to check out Darth's channel, Darth Dividend. I should have linked it. Dude, it's been
Yeah.
a crazy weekend. I've been busy. I've been running and all that. So I don't know. We'll just leave it there. So if you have any last thing to say, man, any parting words of wisdom?
Reinvest the dividends. Dollar
Hell
cost
yeah.
average. Just stay laser focused on your mission. That's all I can say.
Yeah, we'll leave it there. And Killer just screamed your name. Dude, that's so loud. And only one exclamation point. Dude, come on. I would expect better from you than one exclamation point. Weak sauce, Killer. So I'll leave it there, man. But yeah, everybody, thank you so much. God bless you. Got Pee Wee taking us out as per usual. And I'll be back. Same, I don't want to, it's bad time, bad channel, but I'll see you next weekend, everybody. Darth, thank you.
Yeah.